All right. Welcome, everybody, to Finance 333. This is week 3, so lots of threes this week. Welcome to Frida, Christina, Monica, Troy. Thanks for being here. If you have any questions or concerns, just type them in as we go through the course or the discussion this evening. A couple of quick housekeeping items, and then we'll get right into chapters 13 and 14, which are the chapters for this week. Couple things. First of all, missing a lot of assignments over the last 2 weeks. I'm hoping it was just a holiday thing and that we're going to get caught up here in a little bit, because most of you have done a great job on the discussion board, and perhaps, just the assignment takes a little bit more effort, a little bit more time, a little bit more complicated. Maybe it's tripping a few of you up. Please meet with Lindsay Hawes. Go during the learning coach session, or be in touch with her via email if you'd like to work one-on-one and arrange a time with her, or zip me a quick email. A few of you have done that this last week to get questions answered as far as how to do the assignment or what to do on the assignment. So please don't let your questions hold you back on those. Get them in as soon as possible. Tonight I will be showing you, and in fact, let me just do this here real quick on the screen. A few of you are still having a really tough time getting into the ebook, and there's not really at this point, I mean, we're 2 weeks into the course. You should be calling anybody that you can possibly get a hold of at the college, as far as tech support, your advisor, the operator, anybody that you can possibly get in touch with in order to overcome that issue immediately. And that's something you do right when the class begins, and you do it until you get an answer and get things fixed. In some one-off situations, there may be just no way for you to get access over the next few days, and maybe it's a temporary thing. And so if that's the case, I have copied and pasted just the assignment for week 2 and the assignment for week 3. I'm showing you right now on the screen, or you should be able to see assignment 2. And the formatting's kind of funky, but it's, everything that you need for week 2 is there. And then week 3's assignment, I will be showing you here in just a minute when we start to discuss that. Christina, I agree. When I was in school, I did prefer just a regular textbook. The problem is regular textbooks at this point are much more expensive. And then when you're in an online course like this, you have to mail it as well. And so I think the school is just trying to save a few bucks, and that's why we end up with these ebooks. But as far as access to the ebooks, we've just got to make sure everybody has access. I'm sorry if you're still struggling to get into the ebook, but that's something you've got to be in touch with the school, someone at the school immediately, and resolve on your end. It's not something I can fix for you as an adjunct. And so I just, I have to depend on you all as students in the class to fix that issue for yourselves. And if you need to be in touch with the school, and anybody you need to through the school, to just make sure that you get that fixed. So good work, Troy. Yeah, iPad. Yep. No, any reader or iPad, or there's a couple different ways you could take care of that. So all right, so I'm showing you week 2. You could just copy and paste the screen if you're having a hard time getting the assignment, and use that. Here in a second, as I mentioned before, and I'll just pull it up now, we'll be looking at week 3. You can always go back to this recorded session and just pause on a screen, right? So I don't need to let you copy this down. You don't need to copy it down. You can either screenshot it or print screen, or you can go back to the recorded version at a later time to get this down if you need it. So anyway, as far as assignments are concerned, please get caught up. I'm a little bit concerned that a few of you are now 2 assignments behind, and when we get to 3 assignments behind, it's sometimes I have people just give up because they think they don't have enough time or they can't figure it out. My comment or response to that would be that you're never too late. I've had people complete everything for the entire course within the last few days of the course, and while I don't suggest that anybody do that, because you probably spend hours and hours and hours and basically give away your life those last few days to catch up with everything, and you're not getting full credit on any of it. While that's unfortunate and shouldn't happen that way, I still will accept it, and if that's the only way you can pass the class because of other things that have been going on the first couple weeks of the course, that's fine. just get caught up as soon as you possibly can, and be in touch with me or the school right away, or the learning coach right away if something specific is holding you up. So far, just having graded the checkpoints already, having graded all the discussion boards already to this point, and the assessments, reviewing the assessment scores, I'm fairly confident that most all of you are participating at this point in the class. It's just, like I say, a handful of you are missing just a couple things. And once again, this week on the discussion board, I had a handful of people not complete all 3 comments. And once again, I'll reiterate the fact that if you didn't complete all 3 comments, you can still go in and complete additional comments or responses before the end of the course, and I will give you additional points. Now, having said that, I don't guarantee that I'm going to grade it anytime really soon. The only thing I guarantee as far as grades are concerned that is if you turn in all your work on time, you'll have a grade by Tuesday at noon, unless there's a holiday like there was last week. Okay? So we'll have all our grading done by tomorrow at noon, and if you have any questions or concerns on your grading as far as the feedback, just go ahead and email me as well. All right, so for tonight, let's see. So if we do more than 2, we get extra credit. No. So extra credit, Troy, just as an aside though, I have awarded a few students a couple points of extra credit on the discussion board. And that's because they turned in everything on time and they really did some very thoughtful, meaningful responses. They put a lot of effort into it. It was evident that they put a lot of effort and time into their comments and responses. So there are a couple points worth of extra credit sometimes. It's hit and miss just depending on what you're doing. But as far as just giving extra comments, no. I think you know that, right? That's hence the LOL, right? You're just playing around. But for somebody who's already gotten their assignment corrected or their discussion board corrected, and then for those folks that go back and resubmit or edit their discussion board, in essence, I'm giving them extra credit, right, by giving them additional points if they're willing to put in effort and redo it or edit it. So anyway, so there are some additional points available to you if you just don't complete the work fully and then go back in and edit or resubmit for those additional points. So keep track of the feedback that I give you on the grades, because I'll usually encourage you to resubmit or add additional comments if you're available, if it's available to do that. All right. How did everybody feel about the test this last week? Nobody ever likes tests. This one was a little bit longer. Some of you said it was pretty tricky. Ooh, that was quick, Christina. So not positive on your end. Confused, tricky. Okay, so a lot of feedback that it was a pretty tough test. The scores do reflect that. So what will happen is if the average score is low, which it very well might be on that second test, then I will curve the score to make the average a little bit higher. However, I don't usually look at that until the end of the course. So sometime, probably next week, I'll be looking at that to see if I need to curve those scores up. At the same time, a few of you have asked if you can retake a test, and I've encouraged you to be in touch with me in week 4 after we've got that far into the course to see whether or not it would make sense to have you do that or not. Could be available as long as you've turned everything in like we talked about in week 1. I'm willing to visit with you about different options to improve your score as long as you've turned in all your work. If anything's missing, we're not going to have that conversation until after you've completed all the work for the course. Okay? All right. Monica, yes, just stay on and we can chat for a minute. Troy, as far as the posts, yes, if you've added posts, you'll be just fine. And I'll be looking at them. If you've added them, after the due date, then I'll go ahead and check it sometime between now and the end of the course. No guarantee on the timing. All right, so this week there's a shorter test again. We're not going to have the longer one like we did this last week that's considered kind of a midterm, right? And we will, as we always do, go over at the end of this class the topics that you'll need to know. As you've taken these first 2 tests, I hope that knowing the topics in advance has been helpful. I know that for some of you, even if you know the topics, it still feels like it's been hard and tricky and been tough. What I would say to that is now that you have a better idea, of how that works, I hope that it will improve your scores for both this week and the final, and help you to understand how you need to study. What ends up happening many times is people take the notes as far as the different things that I tell them will be on the test from the session, right? And then they take the test and try to look up answers while they're taking the test based on topics. My just 2 cents of feedback is that if you will carefully study those topics, everything the book has to say about the topics, not Investopedia, not other sites, but if you'll carefully study the topics that I tell you will be on the test each week from the chapters in the ebook, I think that you'll feel better prepared. And even if you do have to look something up, it won't be the same. Sometimes when we're looking things up while we're taking the test, it just is too stressful, right? We're in the midst of taking a test. We second guess ourselves. If we don't understand it, it's hard to learn a new concept at the same time that we're taking the test. But if you carefully study those topics before you get to the test and really study them, and try to get them the best you can, then I think you'll be okay. You'll be in decent shape going forward. Yeah, I don't know for sure, Christina. The textbooks are always, I would say the textbooks are always more difficult than, just your standard article online to understand. A lot of times that's because you have PhDs that think they're very smart that write the textbooks, and unfortunately they don't write them very user-friendly. They write them kind of like they're in a different language sometimes. And so that's why I say, read through the chapter, but then really carefully, take on that topic, and read and reread the segments from the e-chapter, or the ebook about the specific topics that we tell you will be on the test. And Christina, you and I can talk a little bit more offline, after the class, but yeah, I think the challenge for all of us is, if we wait until the test to try to understand the concepts, then the test will probably trick us into getting the wrong answer. The thing they have to do, just so everybody's aware in these classes, is they can't make the answer so easy that you can just do a Google search for every single question, right? And so the challenge is they have to make them a little bit trickier to weed out the folks who are just doing a Google search during the test. And so we have to just spend more effort and time and energy in the book before we get to the test. I think a consistent problem that I see is that people get to the test not really understanding any of the concepts. So, well, and Christina, that's, like I say, that may be a whole different issue, and you and I can kind of talk through that a little bit, and maybe give you some ideas or tips on how to kind of study or pre-study from the chapter before you get to the test. One thing, just to read through the chapter, if you read through it and feel like you don't understand anything from the chapter, that's when maybe I'd suggest you go and have a session with the learning coach on Thursday night for a few minutes and have them kind of talk with you through, some of the information. And Amanda, they're not trying to trick you. I feel like I'm trying to justify the book and the folks who write the book. Frankly, I don't care for the book or the test. But the issue is, like I say, in these online classes, they can't make them 100% easy and straightforward because too many people, all they would do is just Google every single answer and they'd never learn anything. And that defeats the purpose of these courses. The purpose is for us to try to understand these concepts before we get to the test, right? And so if you really fully understand those different topics, should be in decent shape. Doesn't always guarantee it, right? Might still get tripped up by something, but should really help us if we put in significant effort before we get there. Okay, that's probably enough about that. It turned into kind of a negative conversation there because a lot of you, sounds like, are really feeling like the tests are tricking you. Like I say, the folks who write the tests, and I'm not that person, but the folks who write the test have to make them a little bit less straightforward just because we're an online course and people people basically don't learn the concepts or do anything. They just Google through it, when they get to the test, if we don't make it a little bit more challenging. So, and Christina, you're always welcome to email me. I've had a few of you email me questions about test questions, and we've been able to clarify, I think, a few. Usually what it comes down to is just a misunderstanding of the text, not necessarily the test question, but what the text was trying to say about those topics. So, yeah, and Troy, I'm with you. One of the biggest challenges I had in my online courses is, getting through those questions as fast as I could, and sometimes the first answer that I think of, I think I understand the question, and I'm missing something or a small detail about the question because I'm just rushing through it. Okay. So this week, like I say, we'll cover the 10 topics that you'll need to know for the test at the end of tonight, at the end of the session. But perhaps before that, let's cover a little bit about the assignment. This week's assignment is another end of chapter case study type situation. And as you've already seen from my grading in week 1, and you'll see in week 2, APA formatting, getting to 3 pages, these things are not nearly as important. In fact, will not affect your score at all, as long as you have comprehensively addressed all the questions and the scenarios that the question is asking for. A few of you in week 1 had a lot of writing but didn't address all the answers, and so I couldn't give you full credit. Others of you were pretty concise in your answers, didn't have a lot of writing, but you fully answered the questions, and so I was able to give you full credit. And then a few of you gave half-sentence answers, didn't give complete thoughts on your questions, and that's not acceptable as far as these assignments are concerned. We've got to have full sentences, full thoughts. You've got to be more comprehensive in how you approach it, make sure that you're writing in full thoughts, and making sure that you cover all aspects of the question that you're trying to answer, okay? So I'm not going to be as picky about you getting to 3 to 5 pages like the instructions call for. I'm not picky about formatting, but I am picky about making sure that I can find you being complete about answering all the different scenarios and questions that the case study is asking for. Okay, is that fair? Does everybody understand kind of what we've done with the assignments in this course? Because I'd hate for you to think that you're still trying to get 3 to 5 pages out of short answer questions. I've tried to be understanding about how these questions are formatted, and they're not formatted really to be, a 3 to 5 page essay. They're formatted more to be a short answer situation. However, I want them to be complete answers and complete thoughts. Good. Sounds like we're on top of it. This is the last week for an assignment, so hopefully at this point you feel comfortable with these. As in weeks past, the chapter that precedes these questions is your most important thing to consider for the assignment, right? So if you go straight into the assignment and just try to answer what they're asking for, you'll probably get, some of the credit or even most of the credit. But if you really want to do well on the assignment, find in the chapter, just the chapter that precedes the question, find in the chapter where it talks about whatever the question is about, and make sure that you're demonstrating through your answers that you've looked at the text, okay? That you've actually read about what the book had to say regarding this particular situation. So for this week, it is a case study about a mortgage banker in Phoenix who basically is wondering whether or not they should hedge, an investment position they have. And hedging is something that we'll talk a little bit about tonight. We probably won't have a lot of time to talk about it, but it's covered very well in Chapter 14. And the idea is you're going to want to go through this case study and kind of walk through why or why not, and talk through why or why not this person should hedge their investment, okay? And when we talk about hedging, we're just talking about protecting their investment, okay? And why would you not protect your investment? Because there's a cost associated with protecting your investment. So everybody wants to protect their investment if it was free, but you have to evaluate whether or not he should or shouldn't based on the fact that there's a cost associated. There's always a cost associated with hedging an investment or protecting an investment. Okay, so this case study describes his investment, describes how it's done, describes the quantity of shares that he has, and then it basically asks you to consider, based on what the book has to say, okay, based on what the book has to say about hedging strategies, whether or not he should or shouldn't hedge the position. And when it asks for your opinion, I'm not ever going to dock you for what I consider a right or wrong answer. That's not the issue. Okay, so don't get hung up on what the right or wrong answer is. Get hung up on understanding the concept of hedging for this week's assignment, and then making sure to demonstrate that you understand why someone would hedge and why someone wouldn't. Now, whether or not you agree or disagree that somebody should hedge, that, like I say, that's not going to affect your score. What's going to affect your score is that you're comprehensive and complete about how you address the case study. Okay? All right. So that, I think, is enough about the case study. Let's get into the material tonight so that we can hopefully get into some material about hedging, as far as some of the slides before we run out of time tonight. Like I say, we still need to spend the last just about 5 minutes is all talking about the test here at the end. But the first topic in Chapter 13 that we're going to talk about before we get to the material in Chapter 14 is we need to talk about constructing portfolios and managing money on your own. And why do we need to talk about this? Some of you might say, I'm never going to do this on my own. I don't want to invest on my own. And this is the and the issue here is, it's not that I expect that any of you or all of you or even most of you are going to invest on your own. It's that you become a more educated and a better informed, a more well-informed consumer of investments if you understand how it would be that you would do it yourself. So, for example, if I understand how a plumber, does the basics, right, or an electrician does the basics, or a home builder does the basics, then if I'm a consumer or someone who's paying for those services, I can be better educated on how and what I get done, right? So even if you use an advisor to do investments for you, it's not that you need to understand everything, all the ins and outs, but if you have a basic understanding of how you could manage your own money, that will help you to be a better steward and someone who can keep that advisor accountable for doing a great job for you. Can I email out the slides? What I can do is, Monica, is I can just post the slides on the announcement board. Is that okay? Instead of emailing them to everybody? Let me just make myself a quick note, and then you'll have all the slides. Post slides. Got it. Okay. Ron, welcome. All right, so we'll go ahead and post the slides after tonight once we wrap up. Okay, so as far as in investing, and to your point, Ron, yes, we want to keep people honest. It's not that everybody we work with is bad, right? But I will tell you, in my own experience as an investment advisor, folks who try to get involved a little bit and understand it a little bit, it's not that they understand everything, but folks that try to get involved and understand it a little bit are better able to help me help them, right? They're able to communicate what it is that they really want better. They're able to help me make better decisions because they're informing those decisions, and anything they do to inform my decisions makes the decision better because it's their money, right? And so in my world, that's really helpful. But you could also, in more simplistic terms, and I think I've brought this example up before, you could compare it to shopping for an automobile or a car. If you've done your pre-work, your basic research on what kind of car you want, what color you want, what kind of model, what kind of brand, all those different things, and then you go shopping for a car, you're gonna probably end up with a better purchase than if you just leave it up to the salesperson to sell you on something, right? And the same is true for almost everything else we do. So today we're going to try to learn a little bit about managing money and investments, and hopefully that'll help you to be a better informed decision maker when it comes to investing, even if you do use an advisor in the future. Okay, so a couple things that we need to think about. investors, so you or I as investors have to come up with pretty specific objectives before we even get started with different investment options, okay? So the first step is to determine for ourselves what our objectives are. And this talks about a lot of different issues that go into objectives, but the bottom line is you're either looking to preserve your money first and foremost, grow your money first and foremost, or get income first and foremost from your money. Now, a lot of investments involve a combination of one or more of those different objectives, but to be clear on what you're going to invest in or make a decision about what you're going to invest in, you need to understand for yourself which one of those is the most important. Okay, so sometimes I meet with people at the bank and they tell me that they would like to grow their money as fast as they can, and then I say, okay, how much risk are you willing to take? And they say none. My number one priority is I want to keep things safe, and then if I keep everything safe, I'd like to grow some. So in reality, what their true priority is preservation first, right? And then growth a far second. So if I can get their money to grow but keep it completely safe, they'll be happy, and that will meet their objective. But if I just stopped asking questions after they told me they want to grow their money, then I would have them in something probably more risky than what they would like. Because if I see or sense that somebody's number one objective is to grow their money, and maybe number two is income, and maybe number three is preservation, a far number three, then that type of investment's usually going to be a little bit more risky and have more risk associated with it. Okay? So does that make sense? We've got three main objectives: preservation, income, and growth. Most people are some kind of a mix between those at some level, but knowing what that number one priority is and having a clear number one objective is very, very important to then being able to decide what types of investments to invest in. So that's step one. What's your main objective or mixture of objectives? Step two is to determine the type of risk and time frame that you have. And so those are also very, very important concepts. I can't make an educated decision on what to invest in until I understand how long my time frame is for the investment, and secondly, how much risk I'm willing to take as an investor. So that's why when you meet with an advisor, if you've ever met with a financial advisor, one of the first things that they try to determine is time frame. One of the second things they try to determine is risk that you're willing to take by asking some different questions that profile the amount of risk that you're willing to take. And usually they use those two things to determine your objective. But like I say, I think that's a little bit backwards. You need to determine your objective, preservation, income, or growth, then go to time frame and risk, willingness to take on risk. Okay? Now, once you've done all those things, then we can finally get to what should we invest in, how should we invest, what are the products that we should use, what are those options? Because if we've been able to determine objective, time frame, and risk, that narrows it down to the types of products that fit for us, and it narrows it quite a bit. Okay, and then there's all kinds of other side considerations that may be part of our decision-making process: family issues, inheritance issues, special needs issues, one-off purchase issues, liquidity issues, debt issues. I mean, there's all kinds of other things that play in, and that's why we do such comprehensive fact-finding when we're determining what we should do for somebody as far as investments are concerned. And really, you've got to take an inventory of those things if you're doing it for yourself as well, just like I would if I was your advisor, right? So we can make sure and make the right decisions. All right, so we've done the preliminary work as far as, making sure to determine our objective, our risk tolerance, and our time frame. And now what do we do? Now, okay, this kind of goes over what we've already talked about, so I'm going to skip this. Now we go into how do we allocate out our investments. This is what hangs people, people get hung up on this part all the time. They say, okay, I understand for myself what kind of investments I need to do because I know my objective and I know my time frame and I know my risk. However, I don't know where to start. I don't know what to invest in. I don't know how to make that decision. And luckily, sites like Fidelity, Vanguard, and even more commonly now, sites like Betterment, and there's all these different personal investing sites that you can go on now. And what they'll do is they'll determine, you'll answer some questions to determine your risk, your time frame, and your objectives, and then they will allocate your money and invest your money for you And in that way, you don't have to use an advisor and pay for an advisor, but you're still getting a very nice, what's referred to as asset allocation, meaning a very diversified group of investments that is taking the lowest amount of risk that it can for the objective that you're trying to accomplish, okay? Because it doesn't ever make sense to take more risk than what you should for the objective that you have. Does that make sense? It'd be like saying, you go to Five Guys Burgers and Fries, and and the guy says, what do you want on it? And you tell him what you want, and instead of giving you what you want, he puts on extra mayo or extra ketchup without telling you that. That ruins what you've got. And the same is true for an asset allocation. If you put too much of something, you can ruin the asset allocation. You can end up taking more risk than you should and having a problem. And that's why asset allocation is so important. And most advisors and most programs and most online sites that you do investing through can accomplish a good asset allocation very easily, right? Just it's data driven, so it can be computer generated into a good asset allocation for you as far as different investments. And as an aside, 401ks will do that same thing within what's called target date retirement funds. So if you have a 401k and you have what's called a target date retirement fund, that target date retirement fund will automatically asset allocate you and diversify you and manage your money for you so that you don't have to hassle with it. All right, so that's asset allocation. So we want to make sure we know what our asset allocation is supposed to be, meaning how much in large company stock, how much in bonds, how much in international. We need to know that allocation before we get to choosing our individual investments. And there's different ways of weighting things for asset allocations. Here's some examples, kind of going through this fairly fast. Then we have different impacts of asset allocation as far as different things that go into it. And then finally, we can look to individual investments to fill our asset allocation. So now that we know what our allocation is supposed to look like, let's say it says we're supposed to have 50% large company stocks. Once we know that, then we can go and research different large company stocks or indexes that reflect large company stocks in order to fill that position within our asset allocation. So there's just different layers of investing and creating a good financial strategy as far as investments are concerned. But the final step after we've gone through objective, time frame, risk tolerance, asset allocation is finally picking out individual investments. Now, how do we do it? Well, the most common way that people will research when it comes to investments is they'll look at history, right? So if something performs really well historically, they'll make the assumption that going forward it should perform well going forward as well. And that works in so much as we're looking at enough history. If we're only looking at a year or 3 years or even 5 years, sometimes it can be a little bit deceiving because the stock market is cyclical and all the categories of the stock market are cyclical. What that means is it's always going up and down in cycles. And so if you look at a short period of time, maybe like a year or 3 years, the thing that you'll probably end up with is accounts that have done very well for the last 1, 2, or 3 years. And those are usually the ones that will probably cycle out going forward and not do as well going forward. So can you see how that can kind of be a pitfall of investing based on looking at history? If you look at too short of a period, you might end up with something that's done really well in the near term, but is kind of setting you up to fail going forward because it's going to cycle down now that it's up so high, right? And we've all heard the line, buy low, sell high, right? That's how you're supposed to invest. The challenge is if you go off history and if you go off short-term history, you're actually buying high, and that creates a problem for your long-term investing. So you want to make sure and look at long-term numbers, long-term data if you're doing an asset allocation and actually doing your own investments. Okay. Slides go through some different ways that questions that you can ask about different investments. Goes over how to calculate a holding period return, or HPR, which basically is just dividends that the investment provides plus change in value over the time frame, and that gives you your holding period return. This gives you an example of an investment that did very well, a 24.63% return over that year. That's a very good return. But that's the dividend plus the change in value over the original value price. Okay. Let me just scroll through this real quick and see if there's anything else that we need to look at. Just one more thing, dollar cost averaging, or DCA, sometimes it's referred to as DCA. Dollar cost averaging basically is this. You use a fixed dollar amount and you invest over time that fixed dollar amount. Now this seems pretty simple, right? So if I want to do an investment program, I might dollar cost in by putting $100 a month in over a long period of time. And in essence, people do this within their 401ks and IRAs many times because they just have a consistent amount that goes in every month. One of the reasons that many people in their 401ks are successful but not in their investing outside of their 401k is this dollar cost averaging. It's a systematic approach to putting money in over time, the average cost of which is lower than if you just try to time the market. Okay, so dollar cost averaging is a great tool when it comes to investing. I encourage people, if they've got a long-term strategy or plan for investing or retirement, the dollar cost averaging, whether or not it's in your IRA, whether or not it's in an investment account, just non-IRA, non-401k, or whether or not it's your 401k, that you dollar cost in over time as opposed to just lump summing. Lump summing can be very risky. You can put a bunch of money in at once and then 3 months later the market could crash and you could be in a problem. But if you're dollar costing in over time, the ups and downs of the market have much less impact on what you're trying to do. Okay, so that's DCA, or dollar cost average, a very important investing concept when it comes to trying to build and accumulate money over time. All right, I think that's what we want to do from chapter 13. So let's go to chapter 14. While I switch slides, any questions about how you think about putting your investments together if you were to do your own investing? Have any of you, and are willing to share, have any of you tried to do your own investing? You're not alone, Ron. Good. Troy, Frida, great job. Hope it wasn't too painful. Yeah, and the thing is, some investment professionals and some people in the investment world actually make it more confusing than it should be in order to make themselves feel or sound smart. When it comes down to it, and you can learn this from Investopedia. They've got a lot of tutorials and a lot of very straightforward information, about investing. But basically, if you were to spend a few hours on Investopedia and really look through and read through a lot of the information, you guys would know more than a lot of the advisors out there. A lot of advisors out there are just salespeople, and they know how to sell, and they know how to make it sound like it's complicated when really it's not. So a lot of people are with you as far as relying on professionals. That's not very uncommon, and I'm glad people do. Obviously, that gives me a livelihood. It's where my job comes from. Troy, sounds like you were able to have experience diversifying, and that's important. A lot of people, when they invest on their own, get in trouble because they don't diversify. An example of that is Apple stock over the past, just a couple months. Apple stock is down 25%. So somebody who just said, "Hey, Apple's the best stock out there. I'm gonna invest in just Apple," they got hammered, the past 3 months. And does that mean that Apple's bad? No. Apple's a great company. It just happens to be in a period where it went down, and that's not uncommon, even with good companies, to have their stock go down sometimes. And that means, or that demonstrates that we should diversify better. Good. Frida, glad to hear that you had a good experience there. Christina, it sounds like you've done a few different things. Ron, you've got a rollover IRA now. That's great. Sometimes, Frida, we all get caught in that, especially when it's pushing our money up and down, right? It's hard not to watch it, not to pay attention to it. A lot of people will come and talk to me about whether or not they should invest in real estate. And I tell people, the psychology of investing in real estate is much better than investing in the market. The reason is because even though real estate moves around, bounces up and down, we don't get a statement all the time, right? So we don't really know what the value of our property is doing, and we don't really worry about it. That's not why we purchase property. We purchase property for the long term, and sometimes to get rental income, and we've got the right perspective. When it comes to investing in the market, sometimes we just get hung up and caught up on the fact that we're watching our account go up and down every month or online every day, and that drives the best of us crazy sometimes to watch it, move around like that. Where in real estate, we don't get statements, right? Frida, you're not getting a statement every month that says this is the value of your property. And because of that, it's a lot easier to be long-term because you don't worry about that, right? It can go up and down a little bit in value. That doesn't matter to you. You have property either as a long-term hold, right? Or for the income, one or the other. Well, the irony of that is if people had that same perspective with the market, they'd be highly successful. The long-term return for the market since the 1930s in mutual funds is far better than any other asset category. Metals, real estate, anything else. The problem is people get hung up and get caught up in making the wrong decisions at the wrong time because they're looking at their statements. They're looking too closely at it, and it short circuits us sometimes. Our emotions get the best of us, and we make bad decisions in the market because of it. So, yeah, Troy, large company stock has done very well the past 5 years. So, if you have like an S&P 500 index fund, or if you have anything that's got S&P 500 stocks, has been very, very good the past 8 years. Much better than any other of the categories. International has been pretty poor. Bonds haven't been that great. Small cap and mid cap haven't even been as good in some cases as those large companies. But once again, Troy, kind of going back to what we talked about before, sometimes that means, it might be the end of a cycle, right? So we have to be kind of careful about that and make sure that we don't put too much stock in the fact or too much weight in the fact that, it's done well for a while, because, that doesn't mean it's going to do well going forward, right? So that's another reason why we got to make sure and diversify. Yeah, and Frida, I completely agree. I end up working with a lot of people at the bank that have been highly successful, growing, amassing a lot of different units of rental income. And then they get to a point when they're about ready to retire, or after they've been retired for a little while, where they just don't want to manage it anymore. They just don't want to worry about it anymore. So they sell it off, and then I help them manage the assets going forward and things that take a little bit less effort. You're in good shape, Troy. It sounds like you're doing a good job diversifying already. You guys are, out of this group that's here tonight, you guys are kind of an anomaly. A lot of times I'll teach a class like this, have 5 or 6, people at the session, and nobody's ever invested before. It's pretty fun to have a group that's got some experience with it and has been able to do it before. So that's neat. All right, we need to talk a little bit about puts and calls. And I will tell you right now that I'm not a big fan of going into a lot of detail on puts and calls, because I don't think it's very applicable to most of what people do when it comes to investing. Many of you, or some of you I should say, may have seen like late night infomercials about buying and selling options and how you can make money when the market goes up, and you can also make money when the market goes down. And so it's this magical investment that you always make money and everyone should do. Most infomercials are based in kind of partial truths, right? And that's the case for options as well. Is it true that you can make money in up markets and down markets when it comes to options? The answer is yes. Okay. The answer is yes. You can make money when the market goes up by having calls, and you can make money when the market goes down by having puts. Puts are an investment product, a derivative product of investments that you actually benefit when the market goes down. So if you thought the market was going to crash over the next year, buying puts at this point on the market would be a good idea if you were just absolutely convinced that the market was going to go down. If you're absolutely convinced that the market was going to go up, then you would buy calls. Here's the problem. Most of us are not very good at calling what the market's going to do. Many of us think we know, and then the market surprises us. So it's one thing to say, yes, you can make money when the market goes up and down, but the thing you have to do in order to do that is be right, okay? You have to guess right. And most people are not very good at guessing right. If they were, they'd be, make millions and millions and millions of dollars, and they wouldn't be on infomercials. Let's just say that, okay? So what is the valid reason for puts and calls? So the invalid reason in my mind is kind of the speculation piece that people do and most times just lose their money. It's kind of like a gambling situation. You just make a bet one way or the other on the market, and then you buy puts or calls to accomplish that bet, and then you hope that you're going to win. Okay? The reason that calls and puts exist is because of a very legitimate reason for options, and that is when you invest in the market, it's very legitimate to say, I don't want to sell out of my position, but I am concerned that the market might go down. Therefore, I need to hedge my position. How do I hedge my position? I go out and buy a put on the market. That way, if the market goes down and my position that I have in the market goes down, I will benefit from my put and it will offset or eliminate all my losses. Okay? So it sounds kind of too good to be true, right? This is a way to protect yourself against losses. And in some ways, it is excellent. It's an excellent thing. But the other side of the coin is if the market continues to go up, I'm going to actually lose money from my put. And so I won't gain anything from the increase. And so, you'll want to make sure that you're careful to understand that you limit your upside at the same time that you protect your downside. And Christina, I'm just giving you the basics of puts and options, puts and calls. So we are on that main page for chapter 14 still. No, you're fine. And I do get stuck quite a bit. So I'm glad that you're on it. But is it moving now? Okay. So here's the definition. Option is just the right to buy or sell, but more commonly used, it is used for speculation on different direction of the market, like we talked about, different directions of the market. But primarily, it was created and is used to be a protection. So you got different options like puts, calls, rights, and warrants. Puts and calls can be issued on almost any financial product. Options allow buyers to use leverage, and because they allow buyers to use leverage, you can either win really big or lose really big. Basically, it's investing on steroids in some ways because it exacerbates or enhances either your upside potential or your loss potential from investing. It's kind of like Forex currency trading. I don't know if you've heard anything about currency trading, but the Forex currency market and Forex trading is a leveraged market. And so it's either way, either you're going to win bigger or you're going to lose bigger. There's not really an in-between when it comes to options and Forex trading. All right. We need to get through most of this quickly. Just tells you how calls and puts work. Okay, what I want you to be, what I want you to pay extra close attention to is how puts work here. And the reason I would like you to pay extra close attention to that is because this week's assignment is testing your ability to figure out whether or not somebody should use a put option on their investment in order to protect their investment. Okay, so what is a put option? It's something that somebody buys in order to benefit if that particular product goes down. So let's say I own Walmart stock and I'm concerned that Walmart might go down, which would hurt my stock values, right? So you say, well, why don't you just sell it? Well, there's lots of reasons I might not want to sell it. First of all, it costs money to trade out my stock. Second of all, it might be a tax. I might pay a lot of taxes if I sell it. So there's all kinds of different reasons that I might not want to sell my position. So instead of selling it, I might go out and buy a put on Walmart stock, which means that if Walmart does go down, I'll benefit on the put, right? My put will make money. My stock will go down, and that will they'll offset each other and protect me from a loss, from a financial loss. Okay? So that's the concept. That's in theory what it does. When it backfires, okay, Walmart actually goes up in value. If the Walmart stock goes up in value, my put loses value at the same time that my stock goes up in value, and I actually don't get anything. I don't gain anything when the value goes up. Okay, so I've kind of shot myself in the foot if it goes up because I'm not going to benefit like I should have. Okay, so that's the basic concept. I know that's too brief, to really fully understand it, but that's in a nutshell. And then this example that it gives would be very helpful. Just telling you now, it would be very helpful, and there's examples in the book as well in the e-chapter This would be very helpful going into this week's assignment. Okay. All right. So that's what you'll want to know for the assignment is how puts and calls work, and the examples, because you're going to be doing a case study that will force you to kind of work through, not any intense math, but just a little bit of the option math associated with the case study. Okay. All right. So let's look at the test. You've got 10 questions on the test, most of which are true, false, and multiple choice again. No short answer matching questions, just true, false, and multiple choice. Number 1 on the test requires you to understand what a conservative asset allocation means. Okay? What does it mean to have a conservative asset allocation? And before you say, well, that's just so simple, I'm not even going to make a note of it, find out what the book has to say about conservative asset allocations and the types of products that you would put in a conservative asset allocation. Some examples of products that you'd put in a conservative asset allocation. And if you read up on what the book has to say about conservative asset allocations, you should be in great shape for number 1 on the test. Number 2 on the test requires you to understand the order in which we manage our own money. So you'll recall we talked about different steps of before we ever get to picking our different investments, right? And that was something we covered for quite a while tonight, so I'm not going to spend a lot of time on this, but just make sure you understand what the book has to say as far as the order of things that you need to do before you invest and manage your own money, okay? And like I say, we've already talked about them. Should be pretty straightforward, but just make sure you review what the book has to say and how the book has to say it before you get to the test. Make sure you understand what the book has to say about utility stocks. How are utility stocks used? Utility stocks are like power companies, right? Usually they're very low risk. Usually they pay a nice dividend. They're not as volatile, right? Because utility companies just keep collecting and they usually don't go out of business. So read up on what the aspects of a utility stock usually are before you get to the test. You'll get number 3 right. Number 4 on the test just asks you to understand the basics of asset allocation. So some people get hung up on this one, and this might seem like a tricky question. It's not trying to be. Asset allocations don't mean that you put an equal amount of things in each category, right? So when we talked earlier about, hey, maybe you want large company stocks and European stocks and bonds and different things like that, asset allocation is trying to determine the optimal level of each of those categories in order to take the least amount of risk for the return that you're trying to accomplish. And that's a mouthful for just saying basically that asset allocation can have different percentages in different categories based on what the optimal level should be. Okay? So make sure you understand that before you get to number 4 on the test. And just understand why asset allocations, how they allocate. Do they allocate equally or do they allocate unequally or differently? Number 5 on the test just asks whether or not we asset allocate based on individuals or whether or not we put an investment portfolio based on something else. For example, some advisors have kind of pet investment portfolios that they really like. For example, Fisher Investments is a company that puts investment portfolios together and then people buy into those portfolios. So they're not trying to accomplish something specific for you as the consumer. They accomplish something that's been successful, and then you and I as consumers go purchase it. Well, traditionally, investment portfolio construction and advisement has to do with finding out what your personal goals and objectives are and then accomplishing a portfolio that matches those goals and objectives, right? So when it comes to the test, if the test asks you, should you care about the needs of the individual, the objectives and risk tolerance and time frame and all that stuff, the answer, of course, is yes, right? That's priority 1. We want to make sure that we're accomplishing what the client, or you, if it's you, what you're trying to do specifically, okay? Number 6 on the test just asks you what the basic of an option is. What is an option? Why do we use an option? And this is one of the first things the slides say and one of the first things that the book talks about. What is an option? And why do people use options? Okay. What is an option? Just define it and you'll have number 6 on the test right. but define it once again as the textbook that defines it. Don't define it based on a Google search or Investopedia. You've got to be looking at the chapter, to make sure and get these right on the test. Number 7 on the test, you're going to want to know what the definition of rights are. We talked about how there are 4 different types of options. There are puts and calls, and then there are warrants and rights. You'll want to know basically a little bit about rights, just the basics of rights, what they are, what it means to have a right option, and if you do, you'll get number 7 on the test right. Number 8 on the test, you just need to make sure you understand what it means to write an option, okay? What does it mean to write an option? What does the book have to say about the person who's writing the option, and what else may they be referred to as? Okay, need to know a little bit more about how the writers of options make money. Okay, so you've got the buyers of options, and then you've got the writers of options. Okay, the people who actually make the option. If I'm a buyer, I'm not writing it, right? Somebody else has already written it and I'm buying it. So how does the writer of options make money? So if I'm the buyer, I make money if the underlying security goes up or down, right? That's how I make money as the buyer. But you need to understand before you get to the test on number 9, how a writer, the person who creates the option, how do they make money? Okay. And number 10 on the test, you just want to know before you get to the test where one of the first options exchanges is in the United States. And as an aside, it's by far the largest in the United States at this point. But it's the largest now, but what was one of the first places where people could trade options here in the United States? The book goes over it. So if you just have that noted down, that's a pretty straightforward one on this week's test. Okay, so those are the 10 topics that you'll need to know for this week's test. Any questions about those topics before we wrap up this evening? Okay. You feel pretty comfortable about the test this week? Just 10 problems, should be pretty straightforward. Most of those are pretty good. Most of those, if you just understand the definitions this week of those different topics that I gave you, you should be in great shape. Okay. Okay. Christina, if you want to wait on and we can discuss a little bit, but anybody else have any questions before we wrap up tonight? Thanks for coming. Get all your work caught up. Let me know if you have any questions or concerns or get stuck on anything. And have a great week. Good luck. Thanks, Ron. Have a good one. Thanks, Troy. You have a good one. You're doing great. We'll see you, Frida. Thanks for your comments tonight. Appreciate it. Yes, Monica, how can I help? Monica? For the assignment or for what? Okay, so for the assignment, so probably talking about the last problem on the assignment. Okay. So have you already turned in your assignment, or are you still trying to work on it and figure it out? So what I'll do is I'll give you some feedback on how to solve that in your feedback. If you didn't get it right or if you were confused by it, that's okay. And then you can resubmit if you'd like to and get some additional points if it makes sense to. One of the things that somebody else in the class, had a question about is just where do I even begin? How do I set up the problem? How do I plug in the problem? And there are 2 really easy places to kind of start. One is Excel. In Excel, they've got what's called financial formulas along the top. So if you click on formulas and go under financial formulas, you can go into future value, FV, and FV will walk you through the number of years. You just plug in the number of years, you plug in the interest rate, you plug in the payments, and you plug in the future value or the present value, and then it solves for the other one for you. Okay, so that's a way you can calculate those. But like I say, I'll give you some feedback on that if you need it based on your assignment. Okay. Okay, you have a great evening. Any other questions from anybody else? And I've left the recording on, so if you want to ask something offline, just hang on for a minute. But I like to, that question that Monica just had is a great question that I'm sure some other people had as well, and it'll help them out. So I like to keep the recording going for the questions. If we can help other people, that's great. Okay, sounds like we're offline as far as everybody else that's on still. So let me end the recording.